All right, good morning, everybody. Welcome in. It is Wednesday, June 21st, 2023. I'm going to get started here with our pre-market analysis and our review from yesterday. I am having what seems to be a little bit of a technical difficulty on my recording software right now. Okay, let's just try it like this, and we'll get started here. So I want to talk, this is going to be a little bit of a lesson here. I'm going to talk about what happened yesterday. So just want to show you. Let's go all the way back and remember what we said. So before the New York Open, which is going to be this vertical line here, we said that if the market holds above the low of the overnight session, which is this dotted red line here on the chart, then it could be one of those things where we expect the bulls to try to break back up to the upside because we had some decent bullish signals from that overnight low. Well, first things first, look what happened. From the overnight low, we had the 4-hour, the hourly showing a decent signal. And look what happened. They came right to the low of the day before in the pre-market, before we, while we were probably doing our pre-market here, and just couldn't get through the low of the day before. That should be a hint, first of all, that, we had a decent signal from the lows from a higher time frame. We got a decent push of about 10, 15 points there, and then right at the low of the day before, it could not get through. Okay, so that's kind of an interesting thing to note. And then when the market opened, remember what I said, if we have a peak below the overnight low and then they pop back up in, that could be our peak below and bounce type scenario. And that might be the beginning of an attempt by the bulls to push higher, right? And we talked about there being specific levels above us that would make sense to hold. In fact, there was this retracement up here. I think that was the 38 retrace of the whole sell-off from the highs of a couple days earlier, maybe Friday's high or something like that. And we had a couple other levels in here, including, more importantly, we had the 3 major retracements, and I think this was the first 38 retracement here. Well, what happened out of the open? We got a peak below the overnight low, and this is sometimes what you see, a little peak, and then we get a major rotation. Here's what happened though, and you should have noticed this as you were watching the charts, is the market couldn't get through the low of the day before on again. So we got first rally up, failed off the low of the day before. Second rally, which looked like a nice peak below and bounce type scenario, but then it failed in front of the low of the day before and continued to kind of chug out sideways here. And then finally, we broke back through the overnight low again. And as you can see here, now we have all the moving averages kind of orienting themselves in a very bearish orientation, right? And then this right here, the kiss to the back end of the 200, after we finally really broke down through that overnight low, and we were basically kind of holding, and then we're coming back to the end of here, that was probably the sexiest opportunity we had yesterday. Okay, now there are some other things I'm going to show here, but that was the sexiest opportunity. You got one tick of a break of the level, and then it sold off for over 20 points, all right, by the end of the day. So it came from, if you got a short off the 200 there at 34.5, came all the way down to 10. So 24-point push. It even came right into our expected area of support. It looked like we were going to hold and then ducked below it, but 24 points with one tick of risk, and this is something setups we see nearly every single day with the levels we look at. So that would have been your clue, holding the overnight lows, holding the VWAP on the second or third attempt to bounce up, and then the break below the overnight low, and then seeing all the moving averages orienting like that, and then this kiss coming right back up. If you were watching this in real time, this should have been a little potential area to try, right? And then what happened? Right off of it, and then we sold off. So I wanted to mention this as the first thing this morning. And then what happened was, it looked like we were going to have a major sell-off, and then they just recovered and came right back up to the morning range and then chopped around. So like I said in my daily review on the website, it was a tricky morning, because if you were watching this and we talked about a peak below and bounce scenario, when this happened and we peaked below and bounced, you probably were thinking, oh, there's the peak below and bounce, let's get long and let's ride this sucker up. Of course, understanding that there were some resistance spots above. But this right here, guys, not being able to get through the low of the day before, not being able to get up through Hopel and VWAP here, and then finally breaking below the overnight low, appreciably there, should have been all clues, and especially this bearish orientation on the moving averages, should have been all clues here that when this popped back up to the 200, should have said to yourself, that is a perfect opportunity for me, a nice low risk area to see if I can jump in and get on this bearish move. All right, a little tricky, but if you understand how to read what the market's doing at different levels, it should have been a clear picture as to what you would have done there. And then that was basically the only thing I wanted to mention. There was obviously some decent holds from some of the moving averages, but nothing amazing to mention. And then finally, at the end of the day, what did they do? Came up, found resistance right off the Hopel. So there actually was a tradable event there. It broke it by less than 1.5 points, and you got just about a 5-point pullback. So you could have grabbed a 5-point scalp out of that. And notice what happened. It just came almost to the 200 to bounce back up there, but just shy of it. But held the Hopel for a nice 5-point tradable event, and then came up and held the low of the day before again, and then kind of petered out at the end of the day and went sideways. Now this level here that you see on the chart that's coming across here, I want to establish what that level is. So we're basically done with yesterday's review. Like I said, a little bit more of a tricky situation for if you didn't know how to read the morning market. But let's look at this retracement level. I want to talk about that as well. So let's zoom out and let me just go back really quickly here. Just make sure. Yeah, so this was about 10:45 in the morning. 10:45. So let's look at the bigger picture here and look at what that major retracement is. Because that was basically where we failed at around 11 a.m. Pacific yesterday and then pulled back into the end of the day. Well, it turns out, and let's go to an hourly so we can see it a little clearer here. Turns out if you drew your fib from the high of Friday of last week, remember that major swing that we actually thought we were going to continue to push and push up into that next scaffolding, but it didn't happen. If you drew, what did I do here? Give me a second here, guys. Sorry. So if you drew your fib from up there all the way down to the low that we made in the morning session, right? So basically the whole fib down, well, the 38 was right there, and the market came up and broke it by, I think, 2 points, almost exactly 2 points. And then we pulled back here, and now here we are coming into this morning, holding the 38% retracement of this whole push down. So again, the fib stuff just blows me away how accurate it is. And then there are two additional things that I want to mention here from a Fibonacci perspective. So let's get rid of that leg there. You can see I've got them up there. So this morning, assuming we don't break the low of the overnight session here and we get a lower low, because we're going to have to, again, redraw that fib even lower and the levels will shift. But if we don't break the overnight low here, we've got the 3 major retracements back up. And again, we already held the 38 here. It came up, broke 2 points, pulled back, and then we petered out here. If the bulls bounce back up this morning, and again, we hold the overnight low or the previous daily low, the 50%, so let's just talk about the levels. We got 44, 42 quarter. That's the 38 retrace of this leg that we held at the end of yesterday or mid yesterday. The 50% happens to line up nearly perfectly here with the high of the day before and the scaffolding area. So there's a little, let's call it 51 to 53 half, a 2.5 point pocket right there. That being that we have so many important levels sitting right there means we should probably pay attention right there. So I'm going to mark this as, again, 44.51 to 53 half. And we'll make it a nice shaded gray box. And we'll push it out to just the end of today, 3 p.m. my time, Pacific. So that little pocket right there could be trouble if the bulls do bounce out of here. And even if we do get to a lower low this morning, and then it bounces and comes back up here, yes, the 50%, technically the 50% psych level, I call it, it's not really a fib level, is going to shift. However, that little pocket there between the high of the day before and scaffolding is also just a very important area regardless. So don't, just because it shifts doesn't mean that becomes unimportant anymore. That's still an important zone right there, even if we didn't have the confluence with the 50 retrace level. And then finally the 61.8, a little bit further up, brings us right up into 44.62. So those are the three fibs above us that make the most sense this morning. And I want to mention that. And then finally, something interesting that happened here in the overnight session. And I think I want to pull up maybe the 30-minute chart so we can see a little bit more detail with what I want to point out. So this leg, and this is, again, more Fibonacci training almost. This leg right here from the low of the day before up to the new high it made, right? We have this decent little bullish push out. I want to draw the fibs up and take a look. So the market bounced one tick in front of the 50% retrace here. So if you were watching this and you had measured out that fib leg, again, once it started to actually pull back here, well, look what happened. It did actually hold the 38 for a very minor bounce of about 2 or 3 points here, but look at that. A wick right to 50%, again, one tick in front of it, and then an attempt by the bulls to break out. And then what happened here in our overnight session from last night, right to the 61.8 to the tick. I'm not even making this stuff up. To the tick to 61, and then we got our second attempt by the bulls to break out. So you have the leg up, the pullback to the 50 and bounce, not enough bullish strength to break out, pulls back, holds the 61 to the tick, and then again attempts to break out. And now here we are in the pre-market about 15 minutes before the New York Open, and it's failing down through the 61.8, right? So I would say this leg is pretty much over, but there is one last potential area of support, which is going to be the scaffolding there at 16.25. So I just wanted to mention all this stuff just to kind of help reinforce your understanding of fibs and give you more and more examples. And if you just came in, I think I just heard someone else just log in. If you want to get a good little primer on, or at least a clinic on beautiful Fibonacci holds that I just talked about, just watch this recording. Once we get it onto YouTube, so you can review it and get an idea of why I watch these levels every single day and I trade with them. So let's go back now. So there was a lot of things I wanted to talk about there, and then finally, before we get into looking at the higher time frames, looking at our news here, the rest of the week, or at least today and tomorrow, we've got a lot of Fed speak. We've got Jerome Powell speaking today at 7 a.m. So let's go over here, 7 a.m. just to remind ourselves, put a horizontal line there at 7 a.m. and I'll copy that over to my little 1-minute chart on a different screen here, just to remind me if I'm trading, that's right when Powell's going to come on the mic and start to introduce himself and start to talk. And what I want to say about that is I've noticed over the years that when Powell's speaking, the market can be pretty wonky. So just beware that today and tomorrow, with the Jerome Powell speaking and then having the other Fed speakers, and then we actually have the balance sheet at the end of tomorrow, it could be a wonky market, kind of like yesterday, kind of like Monday, the holiday. Could be a little funky. Again, I can't predict what the market's going to do, what type of action it's going to have. I can just say that a lot of times when I'm trading around Powell speaking, it can get a little hairy. So just a disclaimer that maybe the next 2 days don't get too riled up with finding stuff, especially if the market isn't really giving us any type of good trend to trade in. So got that out of the way. Just be aware of all that. Okay, so let's go into the charts and look at the higher time frames coming into this morning and see what they're saying. So Up on the daily, let's look at the candlesticks here. I mean, there's that bearish candle from Friday that unfortunately we did expect to get a little bit more of a push, but we didn't. Market open on Friday and it literally just started selling off. That's how it can be. So very bearish looking candle on Friday, and then yesterday's candle here with that peak down into about 50% of last week, coming down into the next scaffolding area and then peaking down through it and bouncing up and closing up here. I know it's a red candle, right? It's a bearish candle in that perspective, but this big wick to the downside is something that I talk about and teach, and is part of something I look at. You know, so a lot of times, even though it might be a red candle with a huge wick to the downside like that, that's somewhat of a clue to me that we had somewhat of a bullish recovery, although we didn't get, you know, back up to a new high for that day. Something important. So the low of yesterday, to me, just from a candlestick perspective on the daily, it's going to be a critical area to hold again for the bulls. Just like we said yesterday, if the bulls come down and test the overnight low, which is that dotted line you see there, and they can't really get through it, or they peek through and come back up, that is a lot of times the beginning of that rotation back up. And again, we can't really say whether it's going to happen 90% of the time or 50% of the time, but it is a pattern that we see over and over again when we review our charts. So just be aware that that's going to be important there, just from this zoomed out perspective. Now, as far as any type of signal here on the daily chart, like I said, from the highs that we keep pushing up to, there's really no sign of a bearish divergence or anything like that. And then on this pullback for the last couple days, really haven't seen any type of bullish signal either. So the daily's not really giving us any type of strong signals, but obviously the price action is really strong. And then I want to also just mention here, again, we talked about seeing like bullish candle, bullish candle, bullish candle, bullish candle. Eventually 4, 5, 6 candles in, we typically will see a couple red candles, right? So, and I mentioned this, I think, what was it, yesterday? We were talking about seeing these really nice pushes, 3, 4, 5 strong candles for the bulls, and then a little bit of an in-breath, right? And that was kind of the analogy of breathing out with all that energy, and then breathing in to regain energy, and then breathe out again, right? So it's a beautiful picture here of 5 or 6 candles to the upside. There was a little bit of a pullback there, and now we're getting those bearish candles, right? That in-breath. So all this makes sense, you know, even though we are still bulls, remember there's always going to be pullbacks, right? So that's what we got up on the daily, right? Yesterday's candle, to me, with that huge wick, kind of hints that, hey, that could be the beginning of the rotation back up. But we're going to have to see this morning if the bulls can defend that area. And if they can, and we can hold, and we don't do what we did yesterday, which is hold, and then we can't get through the low the day before and we fail, or some critical level, then we could see, you know, maybe the beginning of the next push up. Now, we don't have, like I said, a nice daily bullish signal sitting there along with that potential bullish wick that I'm interpreting there. But hey, sometimes it's not there. It's not like every time the daily has a signal, it has to go, and every time there isn't a signal, it's not going to be the beginning of a push. It's just that more often than not, all these rotations that we're seeing, the bullish rotation from here, the bearish rotation from here, etc., all have bullish and bearish signals leading them. It's just that sometimes it just goes and there's no signal, and that's just the way it is. So let's go down to the 4-hour here. And guys, look at what's been happening, you know. Let's go maybe even to the hourly and look, you know. It's just kind of, it's a total mess right now, you know. Just kind of, if you look at it from the perspective of like channeling here, just been channeling, and if you've been trying to trade channels, it pops out and you think, oh, let me get short, and then it comes right back up into it, right? So it's been a really messy situation coming for this week, basically. And we just get lots of counter signals back and forth. It's very hard to really put a lot of weight on one side or the other, given the fact that everything looks this way. But let's go to the 4-hour here and look from yesterday's low, there's a bullish divergence on the 4-hour, right? A pretty significant time frame, pretty significant signal. However, what happened yesterday is, like I said, we bounced out, we pushed up, and then we pulled back. And remember, we held the 50% retrace, and then we didn't have enough strength, and then it pulled back and held the 61.8 retrace here in this overnight session, pre-market session, and then we tried to bounce, and then it's failing again. The problem is we've got the bullish signal, but there's a lot of weakness in the market. So every time the bulls have tried to hold and push, it keeps getting swatted down, and there's no energy to the upside. So, this bullish signal, in my opinion, the bulls tried. They made an attempt. They failed around the 38 retrace of the leg up. And then they tried holding some key levels on the retracements, and it just keeps failing. So not a great sign for the bullish signal we got from the low of yesterday. And I believe what we have is the bullish signal on the 4-hour and the bullish signal on the hourly. So a good confluence there, but again, it petered out right off the 38 retrace, and there's just no bullish strength in the market at the moment, right? So this signal we're getting from yesterday's low, it almost seems like we're out of luck here. Now, again, same thing that I said on the daily. If it comes down and tests that low, or it tests the scaffolding and we bounce, then good. It looks like we might get some follow through. Or if it comes and just kisses into it, maybe peeks through and comes back up, then yeah, this signal will still be in play. But once we really get through the low of the day before here, we're going to have to ignore that signal. Again, I have to always say, it could just be a little peek through, and then we come right back up, and that might be the beginning of the rotation there. But if we really get through here, maybe it comes down, then we parry off the back of it, and we start to hold. It's looking like at least a push down into some other levels below us. So I've already established above us what we have, right? We have the 3 major areas where the retracements are, and the 50% retrace happens to be a very, very stacked area with the high the day before and the scaffolding also sitting there. So we've got those two, and then we have our market scaffolding again at 44.79 quarter. So those are the levels above us that could act as resistance this morning. Let's go ahead and zoom this up. If the bulls do, in some fashion over here, hold and attempt to come back higher. And then remember, in front, before we get up to the retracements, we do have the holy orange power level, the close of the day before, and 50% of the day before, all stacked right there about 44.29, 44.30. Okay, so that's another very, very, very important level this morning, that if the bulls are going to bounce, they're going to have to get through. So if they can at least get through that area right there and get up through it, then it's a little bit more of faith that we're actually going to get an attempt to come up to the high of the day before. And if they do get up through this first area, we do have the retracement in the way that held the market down the day before. So that is also in the way, right? So that's what we have above us. Let's look at what's going on below current market price, below the low of yesterday. And we only have 3 minutes here before the market starts ripping open. But what I want to talk about is the fibs. So if we go out to the most zoomed out area, we have the whole fib from the low of last year all the way up to the high we just made a couple days ago. That's way too far away for us to really consider. Then we have kind of the second smallest leg, which is this one here, the low of March of this year, all the way up to the high we just made a couple days ago. And that is the next, in my opinion, most significant fib leg to consider. And then the problem with that is, again, that 38 is so far away that it's probably, something we don't have to pay attention to right now. And it just so happens that the 38 at the moment, again, if we don't push to a new high, the 38 happens to sit right off our scaffolding level nearly to the tick. So the next level, or the next group of fibs, is going to be this push from 41.06 right here all the way up to our high. And if you do a fib there, it gives us a couple levels. We've got the first 38 just at 4,400. So if the market gets through the low of yesterday, and it can appreciably get through it, it's not just a peak and comes back up, the next level we're looking at potential support is 4,400. Okay, so that's what? Just about another 10 points down, and then just a little bit more than 10 points below that is going to be scaffolding, which you should have on your charts. And then we have the, I think that's the 61.8 retrace of the whole thing from 4106. 4306, sorry. So 4306 up. Okay, so the 50% is 4,400, and then the 61.8 is going to be down here at 4378. Okay, any further from 4378, and it's all the same levels I listed for you yesterday, the day before that, and last week. So all these other levels you should already have on there. That 67 to 69 area, the scaffolding, and then this 46 to 47, 48 area, then the scaffolding, and then this major swing area I'm watching, or structure zone, 43.22 half. So everything below should be the same except for these two additional retracements that I just put on here. And then again, everything above we've already established multiple times. So happy trading out there. Be careful again with Powell speaking in about 30 minutes. The market could be a little funky. And I'll let you guys to it. So I will see you tomorrow. And remember that we have our weekly webinar today at 12 noon Pacific time. I guess that's what, 3 p.m. 3 p.m. Eastern. So I will see you guys then, and hope you have a successful trading morning. Take care.